If you want awesome products at great prices, check out the in the description. The storm brewing on Wall Street, Trump's assault on the Fed and the market's tremors. The U.S. stock market experienced another downturn on Monday morning, a ripple effect stemming from President Donald Trump's escalating attacks against Federal Reserve Chairman Jerome Powell. Trump's latest verbal assault, labeling Powell a major loser, underscores the deepening rift between the White House and the central bank, sending shockwaves through the financial landscape. This isn't a mere spat. It's a full-blown confrontation with significant implications for the U.S. economy and global markets. The president's intensified pressure campaign focuses on compelling Powell to lower interest rates, a move Trump believes necessary to counter the inflationary pressures stemming from his recently implemented tariffs. This strategy, however, completely ignores the complexities of monetary policy and the potential for unintended consequences. The market's reaction reflects this uncertainty. The initial relief following Trump's announcement of a 90-day pause on his reciprocal tariffs, a pause that was hailed as a potential de-escalation of trade tensions, has completely evaporated. The stock market gains, once a beacon of hope, have been wiped out amidst the renewed onslaught against Powell. The president's relentless attacks are undermining investor confidence, fostering a climate of fear and uncertainty that is far from conducive to economic growth. Powell, renowned for his measured and cautious public pronouncements, has cautiously addressed the president's tariffs, warning of a potentially challenging scenario for the Federal Reserve. This subtle yet significant statement signals the Fed's unwavering commitment to its established monetary policy, a commitment that is clearly at odds with Trump's demands. In a press briefing on April 16, Powell articulated the potential inflationary consequences of the tariffs, stating, "Tariffs are highly likely to generate at least a temporary rise in inflation. The inflation effects could also be more persistent." This statement underscores the delicate balancing act the Fed faces, maintaining price stability while simultaneously striving for maximum employment. The Fed's dual mandate requires a nuanced approach, one that is not easily swayed by political pressures. Historically, the Fed has employed higher interest rates to curb inflation, a tool that can, however, have the unintended side effect of increasing unemployment. In recent years, a remarkable achievement has been maintaining low inflation, around 2.4% last month, pre-tariff data, alongside relatively low unemployment, around 4%. This delicate equilibrium is now threatened by Trump's aggressive trade policies and his pressure on the Fed to deviate from its established course. The uncertainty surrounding Trump's potential authority to remove Powell from his position adds another layer of complexity to the situation. The Supreme Court is currently reviewing a case that could potentially grant the president broader authority to dismiss federal officials before their terms expire. The implications of this case for the independence of the Federal Reserve, a cornerstone of economic stability, remain uncertain. The potential for political interference in monetary policy is a deeply worrying prospect for investors and economists alike. The current situation is far more than a clash of personalities. It's a battle over the very foundations of sound economic policy. Trump's relentless attacks on the Fed represent a dangerous undermining of the institution's independence and its ability to effectively manage the nation's monetary policy. The market's volatility serves as a stark reminder of the high stakes involved in this power struggle. The question now is not just who will win this political battle, but what the long-term consequences will be for the U.S. economy and the global financial system. The escalating conflict between the president and the Fed chairman is not just a political drama. It's a full-blown economic crisis waiting to happen, and the market is already feeling the tremors. The fallout from this confrontation will be felt far beyond Wall Street, impacting businesses, consumers, and the global economy as a whole. The president's actions risk eroding trust in the stability of the U.S. economy, a crucial element in maintaining global economic confidence. This is not just a domestic issue, it's a global concern. The potential for long-term damage to the U.S. economy and its standing in the global financial system is significant. The independence of the Federal Reserve is a cornerstone of a healthy and stable economy, and Trump's actions threaten to undermine this vital institution. The lack of clarity regarding the potential implications of the Supreme Court case only exacerbates the uncertainty. The coming weeks and months will be critical in determining the future trajectory of the U.S. economy and the long-term effects of this unprecedented power struggle. The market's jitters are a clear signal that the stakes are incredibly high. This is not just a fight between two individuals, it's a fight for the soul of American economic stability.